Dear Chartered Accountants, working professionals, and students in the domains of Indian auditing, accounting, and the tax and regulatory space, welcome to podcast of Fca Deepak Rao, a practicing Chartered Accountant.
Daily news and updates for 26th December 2023. The Reserve Bank of India, via notification number FEMA 14R/2023-RB, dated 28th December 2023, has introduced Foreign Exchange Management Manner of Receipt and Payment Regulations 2023. The newly introduced regulations will replace the existing Foreign Exchange Management Manner of Receipt and Payment Regulations 2016. As per Regulation 3 of newly introduced regulations, unless permitted by RBI or allowed by the Act, rules or directions under the FEMA, no person in India can make payment or receive payment from a person resident outside India. The regulation further provides that all the receipts and payments between a person resident in India and a person resident outside India shall be made through an authorized bank or authorized person. Regulation 3 of the Foreign Exchange Management Manner of Receipt and Payment Regulations 2023 has bifurcated the transactions for receipt and payment into two categories. Category A, trade transactions, and Category B, transactions other than trade transactions. The SEBI has notified amendment in LODR and ICDR regulations. Amendment has been notified in Regulation 91E, that is disclosures by a social enterprise in respect of social impact. Now, the annual impact report shall be assessed by a social impact assessment firm employing Social Impact Assessor. Further, in Regulation 292G of ICDR Regulations, a not-for-profit organization may raise funds on a SSEs through issuance of ZCP Instruments to eligible investors instead of institutional investors. The Indian economy is likely to grow 6.7% in financial year 24, according to a median forecast of 11 economists, staying resilient despite external headwinds as domestic demand and improving investments provide support. Prospects have improved from a month ago when an ET poll pegged the current fiscal year's expansion at 6.3%. However, the median is still short of the recent Reserve Bank of India estimate. Earlier this month, the central bank raised its forecast for the year to 7% from 6.5% estimated earlier, following a better than expected 7.6% rise in GDP in the September quarter. The much-awaited redevelopment of Asia's biggest slum, Dharavi, spread over 600 acres of prime land in the heart of country's commercial capital, Mumbai, has intensified the discussion surrounding transferable development rights or TDRs. The concept of TDRs originated in New York City in the early 1960s. While it has been utilized worldwide since then, it has garnered increased attention, particularly in major Indian cities over the past few decades. This surge in interest is driven by the necessity for organized development to prevent unplanned and chaotic urban growth. The government is considering the extension of the second leg of its flagship incentive scheme for manufacturing electric vehicles or EVs into the next financial year and is likely to seek additional resources in the interim budget to expand its corpus. With the third edition of the Faster Adoption and Manufacturing Electric Vehicle Scheme or FAME yet to get a nod from the Finance Ministry, possibilities are being explored to extend the current edition till a new supporting framework is put in place.
This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.